I think the biggest problem for option traders rather than stock investors is that a stock investor migrates over, becomes an option investor. They don't really understand that these are for a trade. Options all have an expiration date, stocks generally don't.
But are these stocks buying opportunities of a lifetime, or should investors avoid them like the plague? Joining us with his thoughts, John Najarian, co-founder of OptionMonster.com, as well as a Fast Money contributor. John, great to have you with us.
Great to be here, Melissa. Thank you.
You look at that growing number of single-digit stocks out there. Are there any screaming buys in your view?
There are. In fact, I don't really care about the price level of stocks, of course, as much as the action in the accumulation of these shares.
And most of the gold bugs will say never, but if that should happen, expect gold prices to come down very heavily. It did happen in the 80s.
Yep.
We both remember that.
Yep, it did in the 80s, and we've seen inklings of it here when gold broke down in the GLD.
I'm sure the gold traders back here are going to have me on the most wanted list.
No, they just want volatility, man. They just want to trade it.
True.
I mean, and that's the beauty of the CME, folks, because you have all these different market makers, as you can see, thousands of them across the floor, and they're risk takers. They're the guys that take the other side of your trades for moments in time. They're not betting against you from now till whenever you get out of that trade. They're moments in time trying to jump in, sell to you, cover at a lower price, or if not, cover with something else. That's their job when they're managing risk. And there's, like I say, 3,000 or 4,000 of them behind us.
Look for more volatility in gold.
Capital versus where those assets were being marked. And I think Geithner's plan gets us away from relaxing mark-to-market accounting, gets us away from forbearance. Well, I think a lot of it, Preston's information overload. People just have too much at their fingertips, really. I mean, how much can you really take in? And then it's incumbent on you to sort through there and figure out what's important. Number one, they didn't think anybody could take delivery of gold because we're talking physical bars of gold. And they didn't think anybody would take delivery of those. So what he did was he threatened to take delivery of them. Well, they blew it off. They figured, no way Ralph's going to actually take delivery of gold. Nobody could afford to take that. But Ralph was a very wealthy man and he could afford to do it. So what did he do? Ralph went and he sent an Illinois armored car to New York. So in other words, he paid to have the armored car go from here in Chicago, all the way out to New York City. Tech that's been the wreck, and it's been because of the likes of course, Google and the anticipation of Apple, which you and I will be able to talk about, but also I think people are nervous ever since IBM, which has got that international scale and scope, along with Google. With the U.S. credit being downgraded for the first time in its history, a lot of folks have flocked into gold. Just take a look at the dramatic move on this chart just below here. You'll just see an explosion in the volume of trade in gold, or the GLD if you like to trade securities, and or the futures, both of course moving lockstep to the upside. A monster move for gold as it blew through $1,800 per ounce this week.